Welcome to Smart Wealth with Joshua.
Your daily stock analysis and catalyst talk. Today, we're looking at IonQ.
If you find our talks useful, please consider subscribe, like, and comment underneath to support our podcast. And if there's any stock you want us to look into, leave it in the comment section below.
So let's get into the analysis. Look, when you're analyzing a stock in a field like this, frontier tech, you have to look for real technical momentum, real execution.
And IonQ just delivered something on that front, did they?
They delivered a signal that is almost impossible to ignore.
Okay, so let's start with the foundation of that signal, the financials. I'm looking at their third quarter for 2025, and it really seems like they just, separated themselves from the rest of the pack.
They really did. That revenue number, $39.9 million.
And to be clear, that wasn't just meeting guidance.
No. It flew past the high end of their own guidance by, 37%. That's staggering.
A beat that big on your own projection? That's a huge tell.
It's a profound indicator. But the real context for me is the year-over-year number, that $39.9 million. That's 222% growth.
Wow.
For a company this deep in the tech weeds, that kind of acceleration, it just tells you that adoption is happening way faster than anyone, even their own management, thought it would.
And, faster adoption almost always means raised expectations, right?
Exactly. They immediately raised their full year 2025 guidance. They're now projecting between $106 and $110 million. That's a massive vote of confidence.
So beyond that top-line growth, what else did you see? I mean, are they building this on a sustainable foundation or just, selling at a loss to get systems out the door?
That's the right question. And the answer is in the gross margin. They hit 51.2%.
Over 50%. That's pretty healthy.
It's very healthy. I mean, look, they're reinvesting everything, as they should be. But seeing margins like that suggests that as they scale up, there's real operational leverage there. The path to profitability is structurally feasible.
That financial momentum is impressive, but in the quantum race, the tech is really the long-term currency, isn't it? What's their moat here?
Their entire thesis, their entire advantage, it hinges on their hardware choice. Trapped ion qubit technology.
That's the differentiator.
It is. And it's why they keep hitting these incredible benchmarks. For you as an investor, the metric to watch is fidelity, accuracy. And IonQ just reported a world record, 99.99% 2-qubit gate fidelity.
Okay, let's pause on that, 99.99%. For those of us who aren't physicists, why is that so important?
Think of it like this. In your laptop, if you get an error, it's no big deal. But in quantum computing, errors they cascade. They explode. If your fidelity is too low, your calculation is just useless noise at the end.
So you need that accuracy to do anything useful.
You need it to even begin. That 99.99% is a non-negotiable step toward what they call fault tolerance, a system that can fix its own errors. They are just demonstrably closer to that than their rivals.
Okay, so high fidelity means the answers are trustworthy. But what about the power, the sheer computational capacity?
That brings us to the other big milestone, the algorithmic qubit 64, or hashtag AQ64, and they hit it ahead of schedule.
And what does hashtag AQ64 really mean? It's not just 64 qubits, is it?
No, it's a measure of the useful computational space they can access, and what it unlocks. Well, it unlocks problems that are impossible for today's supercomputers.
Give me some perspective on that.
Okay, hashtag AQ64 represents something like 36 quadrillion times the computational space of their superconducting rivals. It's like trying to find one specific grain of sand on a beach. A supercomputer has to search the whole beach. A quantum computer at hashtag AQ64 shrinks that beach down to a sandbox.
That's a powerful analogy, and I assume this is all protected by patents.
A huge IP portfolio, over 1,000 assets. And it's not just them saying it's better.
Right. Has there been any independent validation?
Absolutely. The strongest kind, DARPA. The Defense Advanced Research Projects Agency, they selected IonQ's tech. When a defense agency picks you, it's a massive validation of your accuracy and your reliability.
Okay, so we have the tech lead, we have the financial momentum, but funding this kind of research must be incredibly expensive. What about their war chest?
Their financial resources are pretty much unprecedented for a company at this stage. As of Q3, they had $1.5 billion in cash and investments.
And then they added to that.
They added a lot to that. In October, they did a $2 billion equity offering.
$2 billion. That's a huge capital injection. You could argue they're just capitalizing on the hype, couldn't you?
It's a fair point, but it really speaks to their long-term strategy. That offering pushed their total cash position to $3.5 billion, with almost no debt.
So they're basically set for years.
They're set for a decade. It eliminates market risk. It eliminates interest rate risk. They can now focus purely on execution, on R&D, on acquisitions without worrying about fundraising.
Which explains the negative free cash flow we see. It's strategic spending, not a weakness.
Precisely. They are spending money to win the race. You see it in acquisitions like Oxford Ionics and Vector Atomic. They're focused on compounding their lead over years, not on, quarterly buybacks.
All right, let's turn the tables. We have to look at the other side of the coin.
Yeah.
What's the bear case here? What are the risks?
And the risks are significant. I mean, this is still a young industry. Despite the amazing revenue growth, the margins are still, deeply negative. We're talking negative 1,836%. An adjusted EBITDA loss of $48.9 million in Q3 alone.
And what about the bottom line GAAP numbers? The kind of thing that scares off more conservative funds.
They missed on GAAP EPS, a loss of $3.58. Now, that's not surprising given the R&D burn, but it does quantify the sheer scale of the investment required here.
Which leads directly to valuation. How can anyone justify the current market cap with those kinds of losses?
Well, they justify it with the future. The total addressable market is projected to be huge, over $20 billion by 2030. But today, the metrics are astronomical.
Like the price to sales multiple.
Exactly. It's trading around 400 times sales. I mean, that is priced for absolute flawless perfection for years to come.
And with that kind of valuation, volatility is a given.
Oh, absolutely. The stock has a beta of 2.62. It swings wildly. The risk is that if commercialization doesn't ramp up fast enough to meet those huge expectations, the stock could get hit hard.
Even with that $3.5 billion cash fortress.
Yes, the cash mitigates the survival risk, but not the valuation risk.
Okay, so let's pivot to the market's reaction. Because despite those risks, the price action has been very strong.
It has. The narrative has shifted firmly to the bullish side. After that Q3 report, the stock surged, 12, almost 13% to over $54. It's establishing higher highs, which is a very positive technical sign.
But what about the moving averages? Are you seeing signs of accumulation?
We are, and this is fascinating. We just saw the 50-day moving average cross above the 200-day.
The golden cross.
Golden cross. It's a classic long-term accumulation signal. It suggests the smart money, the institutional money, is building positions for the long haul, and other indicators like the RSI and MACD are backing that up.
And Wall Street seems to agree. What's the analyst consensus?
The sentiment is exceptionally strong. The average price target is around $70, but you're seeing some really aggressive new targets. Rosenblatt raised theirs to $100.
100, wow.
Yeah, benchmark is at 75, Needham at 80. The confidence has really shifted from speculative to high conviction growth.
So who is buying in? Who are these institutions with that kind of conviction?
Well, the ownership is deep and growing. You have major players like Vanguard, Norges Bank, JP Morgan, all boosting their stakes. Institutions now own about 41% of the company.
That's a serious commitment.
It signals a belief in a multi-year story, not just a quick trade.
So what are the immediate catalysts that could keep this momentum going into 2026? It seems like this whole quantum plus AI narrative is helping.
That macro tailwind is huge, for sure. But there are tangible catalysts for the business itself. They just announced a major expanded partnership with Quantum Basel. That's a deal worth over $60 million through 2029.
So that gives them real long-term revenue visibility.
Exactly. It moves them beyond just one-off system sales.
So looking ahead, say, the next 3 to 6 months, what should we be watching for?
Okay, first, you mark your calendar for early February 2026, the next earnings report. The question will be, can they beat that newly raised guidance? But just as important are the physical milestones.
Like the actual hardware.
Right. We need to track the rollouts of their Tempo systems, that's their next-gen machine, and watch for progress at their European Innovation Center.
And what about the bigger picture, the macro environment you mentioned?
It's just a profound tailwind. Federal R&D money is pouring into quantum globally. You combine that with a market expected to hit $20 billion by 2030. It means this company is just primed to benefit from this whole sector rotation.
So if we boil it all down, the bull case, the bear case, what's the succinct investment thesis for IonQ?
I think the thesis is actually pretty simple. It's technical leadership combined with financial impregnability. They have the tech, and now they have the time.
Exactly. You have the record-breaking fidelity and that hashtag AQ64 milestone. You combine that with a $3.5 billion war chest, then you add in the accelerating commercial growth at 222% number.
Yeah.
They're just in a class of their own right now, positioned to execute through 2026.
I think the biggest takeaway for you, the listener, is just to understand the time horizon here. This isn't a quarterly trade. It's a multi-year investment in a potential leader, and you are paying a premium for that. The cash buys them time, but you have to be ready for the volatility. The key thing to watch is execution on that tech roadmap as we head into 2026.
A fantastic breakdown of a true frontier stock. If you found this analysis useful, make sure you subscribe, like, and tune in for our next market talk right here on Smart Wealth with Joshua.